In this video, we're going to be taking a look at the gold charts in preparation for the week ahead. This is the only chart I'll be taking a look at because I think this presents us with the best opportunities where other charts are yet to, be fully formed for us to get definitive setup for the week ahead. So I'll be focusing on the gold in this video. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. And if you're interested in learning trade first like professional, check out our complete Forex student course on Udemy. I have the link attached in the description below as well. So you can see price has been a solid bullish trend, price creating higher highs and higher lows. And last we talked about the possibility of price either continuing the bullish momentum or going all the way down, taking out this area of support and coming down to this trend line, right? And we seem to have had a bounce of this trend line, now consolidating to give us a precise direction as to where price is going to head. So two things are likely going to happen. We are either going to see price consolidating over here, followed by a bullish move to the upside in continuation of the trend. So this is the first bullish case scenario, and the second case scenario is a bearish case scenario where we get some sort of consolidation over here, followed by a bearish breakout to the downside. So if we do get a bearish breakout to the downside, this could present us with a good opportunity to go short, or if we do get a bullish move to the upside, it could present us with an opportunity to go long. So I'm going to zoom in closely so we can focus closely on what's happening at the current price action to see if we can spot a good opportunity for this coming week. So if I'm just going to leave this trend line, this area of value over here, because it clearly shows us a good area of support, and I'm hoping that this is going to be a good area of resistance in the future or support bounce after we get a breakout as some sort of confirmation. So just to show you what I'm talking about, so if we pull up this trend line like this, cutting across these highs, my confirmation to go long would be waiting to see some sort of consolidation within this range, followed by a good breakout to the upside. So if we get a breakout, you can go in immediately, but for more confirmation, you can wait for a retest of this area value. That's why I'm leaving that green zone active on my chart, so we may use it as a guide when price evolves right beyond the current price levels. So if we get a retest, this could be another opportunity to go long in anticipation of a bullish continuation to the upside. Thirdly, if you take a look at these highs, this could also present us with good opportunities to go long, right? So now the first one will be waiting for price to take out this trend line, which will be one, which is a more aggressive way to go into this trade, right? So a more conservative way option will be waiting for a breakout and a retest of this area of value, and we go long after the bounce. There's no guarantee that this happens, but if you want to be a conservative trader to go in at a very, very low risk with some higher level of certainty that we're going higher, then waiting for a retest would be another viable option. And lastly, we could wait for us to take out this trend line, before we go long. Now, the way I trade this is I'm going to go in aggressively on the first breakout from this trend line. If it happens, that's going to be my first entry, right? So I'm going to wait for some sort of confirmation, which will be waiting for a retest followed by a move to the upside. I may decide to go in again, I may not, depending on how fast or how solid the confirmation is. But the second price level I'm going to get in again will be obviously when we take out this trend line. So if we do take out this trend line, I'm obviously going to go in again. So that will give me two entries. So one after the breakout of this price levels over here. Second will be at the break of this trend line. That will be two entries. And my first take profit target is going to be placed around these highs. So this I'm going to trade gold on a bullish case scenario, right? So my stop loss price levels will be after the breakout from this level. Stop loss is going to be underneath the consolidation. This is the breakout over here, and around here too. When I go long, my stop loss is going to be underneath that price level, or even underneath these lows, right? Because then I'm going to adjust the stop loss from my first entry to this price level. So even if price gets reversed, I'm going to exit the trade at break even without losing a dime, right? So I'm going to use the power of the profit I've made from this first entry to stack up my entry as we go higher. Take profit target is going to be obviously around these price levels while I trade the rest of my positions as we go higher. So that's my bullish case scenario for gold. If you agree with me, please leave your thoughts in the comment section. If you disagree with me, also leave your thoughts in the comment section down below, right? So I'm going to talk about one more thing regarding my bullish case scenario, right? But before we go, let me briefly talk about the bearish case scenario. I'm going to show you why there's a good chance we also go short. Okay, So now for a short case scenario, bearish case scenario, we simply wait for more consolidation to see what price does and see if we do get a bearish breakout to the downside. If this happens, then this will present us with a confirmation to go short. So our entry may align with something like this instead of directly entering after the breakout from this trend line. If this happens, then we want to go short. Stop loss is going to be above the consolidation, at least a breakout, or above this trend line highs. That's if we do get price, touching this higher bound of this symmetrical triangle again before going down, right? So stop loss is going to be around this high, around these price levels, or above the consolidation, at least a breakout. Entry is going to be immediately after a breakout. If we do follow this pattern, then take profit target is going to be around these lows. Obviously, this I'm going to go short on gold. Now, to solidify our bearish case scenario, I'm going to pull up my moving average as usual. So this is a moving average on the 1 hour time frame. So 200 moving average exponential and simple moving average. And this is going to be those moving average on a 4 hours time frame. So we're going to be using the 4 hours time frame, right? So on the 4 hours time frame, you can see that the moving average aligns perfectly with this area of support. So 1, 2. And right now we are currently trading underneath the moving average. So I'm just going to zoom in so you can clearly see what's going on over here. So right now we're currently trading underneath the moving average, and price seemed to have broken below the moving average and retested that moving average. So based off of this retest, it is logical to expect a bearish follow-up, so which is something like this. So a bearish follow-up consolidation like this, which is what we're expecting right now, followed by a move to the downside like this, then go down. If this happens, then this further solidifies our confirmation to go short, because the 200 EMA and SMA serves as a very good band level to track price closely, especially during trend movements, right? So right now, if this happens, then it means the gold chart is probably changing trends into a bearish trend, right? Because when price trades above the moving average, it's considered a bullish trend. When price trades below the moving average, it's considered a bearish trend, especially when those movements are extended, right? So this is another confirmation for our bearish case scenario. So for a confirmation of our bullish case scenario, then you want to take a look at what price does when we visit this moving average again. So if we do get a consolidation, as I explained earlier, for a bullish case scenario, right, and it leads to a bullish breakout from this symmetrical triangle or potential symmetrical triangle, then that will be a confirmation to go long, right? And I believe you can see why. That's because the moving average would have crept up all the way to this price level, acting as a good area of support. So if the moving average acts as a good area of support, which also aligns with this trend line, and we do get a bullish breakout, that gives you a solid confirmation that we are back above the moving average and price is likely going to resume its bullish trend and we're going to keep going higher, right? So that's one. Secondly, if we go down to the 6 hours time frame, for example, 6 hours time frame, you will notice that we just bounced off of this moving average, the 200 and the 200 EMA and 200 SMA. We just bounced off of these moving averages on the 6 hours time frame, which means right now on this time frame the moving average is acting as a very solid area of support. So over here you can see it's also closed with a spiny top, long wick down, small body and small wick up, which is a solid reversal pattern followed by a bullish candle to the upside. We had another retest of this moving average, which also aligns with this trend line, which seems to signal this moving average as a solid area of value and the bullish trend still intact on the 6 hours time frame. And based on the fact that it's on the 6 hours time frame, it's even more, it gives us more confidence towards watching out for what price action does in order for us to take advantage of what we can see on the chart. So now, considering the fact that on the 6 hours time frame we're still bullish, price just bounced off of the moving average, that can also solidify our stance as to be going bullish if we do breakout from this symmetrical triangle to the upside, right? That's one. It also gives us a definitive area of value to watch out for if we intend to go short, which means We watch out to see what price does. Does price come back on the moving average, consolidate within this price level, and give us that bearish breakout we were looking for? If this happens, it means price will have to break the symmetrical triangle and also take out the moving average, also taking out this long-term trend line, which also solidifies our stance to go short. So in summary, what I'm trying to say is that the symmetrical triangle we can see here, so going back to the 1 hour time frame, for example, so you can clearly see what I'm talking about. So the symmetrical triangle we can see here, and for clarity, I'm going to get rid of this area of value for now. So this potential symmetrical triangle we're going to see here is a very solid area to watch out for in order for us to decide how we're going to take advantage of the price movement, potential price movement coming up on gold. That's why I'm going to be focusing all my attention on this chart and make sure I take advantage of the price action of gold when the time comes. That's it for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you disagree with me, please also leave your thoughts in the comment section down below why you disagree with me. I'm sorry I couldn't, talk about more charts, just that other charts right now are just so messy. Currency pairs, Nasdaq, US30, crude oil. So gold seems a bit clearer to me, that I'm focusing my attention on this, and it's better to take out all the noise, focus on what you believe is definitive and stick with that, and in the long run you just make more profits compared to trading lots of trading instruments. That's it from me, guys. See you next week.